Assalamu alaikum, everyone. Hussain Qazi here, your facilitator for the subject financial management. And now we are going to start our syllabus, the subject financial management. So this is what about this document's about the course notes and the practice question of financial management prepared by Hussain Qazi. So the focus area of the syllabus based on this particular document. And the document name is syllabus roadmap. Syllabus roadmap. The entire syllabus, I have classified that particular syllabus into 9 components. Although there are 6 areas of the syllabus, but I have split it, I have categorized with the 9 area of the syllabus. That is number 1, the investment appraisal. The number 1, that is investment appraisal. And this is the topic from where we will start our syllabus. Number 2 and 3 about business finance. Number 2, 3, and 4, it's about business finance. Then business valuation, number 5. Then risk management, then working capital. 6 and 8 both are risk management. Number 1, forex. That's 6 point forex, 8 point interest, and 9 point financial management function and the environment. And then the last one is about the mock, final mock. So let's start the topic that's called investment appraisal. Let's come on, start the topic with the first module called investment appraisal. First module called investment appraisal. So before drill down about the subject, we have to determine what's the actual scope of this particular area of the syllabus. What's the actual scope? So scope with respect to exam, the weightage of the syllabus or weightage of this particular topic, it's about 20 to 25 marks. We have already discussed in our last session that this topic can be examined. And based on past experience, already we have observed that that topic can examine anywhere in the syllabus, section A, B, or C. And you must have to notice one important point. On average, approximately 60% belongs to calculation and 40% related to theoretical. So we have to cover the topic in a manner to cover both aspects, calculations and the theoretical aspect, calculations and the theoretical aspects. That's important. Okay, so for all the syllabus area, that's these 9 syllabus areas, we will consider 9 modules. We will call 9 modules. So we will consider the modules. 1 to 9 are the modules. The first module name is investment appraisal, and the modules are subdivided into units. So how we will develop the syllabus, how we will execute the syllabus? We will cover the syllabus by module wise, and each module have sub units, multiple units. The first topic is investment appraisal, that's module 1, and this module have 8 units. 8 units. So we will cover the thing by one. Unit 1, investment appraisal by NPV method. Unit 2, IRR, payback, ARR. Unit 3, 4, 5, that is about some specific decision making, LT, long-term decisions. Unit 6, risk and uncertainty. Unit 7, the theoretical context. So let's start the investment appraisal by NPV method. By NPV method. Okay. We will start our session with a very basic question of NPV. Very basic question of NPV. Very basic question of NPV. And I strongly suggest even you people are taking the live session or you people taking watching my video. Whenever I say to you, pause and attempt. You have to pause the video and start attempt. That's important. So we are going to start our specific topic of the financial management by investment appraisal. The first unit, NPV. And this is what the basic question of NPV. Basic question. What is the name? What is the question? What's the question about? FM company is considering capital investment in new equipment. Capital investment in new equipment. The estimated cash flows. Cash flows means future cash flows are as follows. Year 0, the investment to 40,000. Year 1, 2, 3, 4, 5 are returns. These are the cash flows. Requirement is calculate the NPV. Simple. Whatever you have done in F2 NPV with the discount rate of 9%. If I ask you to calculate the NPV with 9%, do it now. But do remember, you have to attempt the question not manually, but on system. Start now. Basic, very basic, quick. Quickly reply me. What's the NPV? You just open the Excel sheet. Open the Excel sheet. Just put the figures. Years 0, 1, 2, 3, 4, 5. These are the future cash flows. Take out the discount rate and then present value. And then the present value. Start whatever you think, do it. You have 1 minute. You have 1 minute. Let's start. And do let me know what's the answer of NPV. Start now. Okay, it's now my turn. Discount rate, if someone says that, calculate the basic NPV. So what to do? Take out the future cash flows. Future cash flows means year 0 means investment now. Then we will get return at year 1, 2, 3, 4, 5. So what to do? Discount rate. Just get the discount rate from the table. This is the table of the 9% table. Year 1, 2, 3, 4, 5, 0.917, 0.842, 0.772, 0.708, 0.650. Just take out the value and plot here. But do remember that year 0 have no discount elements. Okay. What about year 1? Take out the figure 0.917. Or you can plot the formula is equal to 1.09 power minus 1, 0.9174. Same answer. Once again, is equal to 1.09 power minus 2. Is equal to 1.09 power minus 3. And then Control C, Control V. Just change the power. So this is what about the discount factor. Present value is equal to 240,000. Take out the cursor. Press the button is equal to left side cursor 240,000 multiply by cursor, that is C5 1 240,000. Then pick Control C. I put the Control C and plot with Control V. Save the time. Don't do with manual aspect. Once again is equal to 240,000 left cursor multiply by 1. Then Control C and Control V. These are present value. And we are here to calculate the NPV. NPV here is equal to sum, bracket open, and select all above. That's all. NPV. That's simple NPV. Whatever I have done, that's what I have done. You people already studied in FM. Oh, sorry. F2, the basic knowledge. Now, what's here? What's here? Here we are going to discuss in depth about the working of NPV. Here we are discussing about in depth about NPV. Now let's start discussion. Okay, our subject name is, listen carefully. Our subject name is financial management. Financial management, huh? Subject name is financial management. Our role as finance manager. Okay. Our responsibility is to maximize the wealth of shareholder. But how? But how? There are three things important. Three things important. We need to decide. We need to decide. Decide means decision making. Decision makings for number one, investment decisions. Number two, financing decision. And number three, dividend decision. But here we are right now discussing about the syllabus area called investment decision. Investment decision. For the sake of this investment decision, what we need to do? What we need to do? Number one, identify the investment opportunities. Investment opportunities. Number one. For example, I am Toyota. I am a finance manager of Toyota. What is my responsibility? To maximize the wealth of shareholder. It's my responsibility. What should I do? One of the responsibility as a finance manager is to identify investment opportunity. But identifying the investment opportunity, it's not only. Identify the investment opportunity. For example, me as a finance manager has identified the market in the Pakistan or other country to launch one another car. One another model of a car in the Pakistan or anywhere in the world. New launching of the car. So that's identify the investment opportunity. But after identify the investment opportunity, evaluate the investment. Evaluate the investment. And here evaluate the investment in financial terms. In financial terms. So if we are moving towards evaluate the investment in financial terms, there are 4 methods from which we can evaluate the investment. Number one, by NPV. Number two, by IRR. Number 3, by payback. Number 4, by accounting rate of return. But right now we are discussing by NPV method. By NPV method. So we are going to discuss the NPV method. By NPV method. So Now we are going to start. Now we are going to drill down how to calculate the NPV. You have a previous knowledge of NPV, that's we have done. But we have to incorporate more things with the NPV. So stop here. Are you people getting the point? Have you got that point? Why we are discussing this NPV topic? Do reply me. Why we are here to discuss NPV? How the complexities will handle, I will tell you, don't worry. Do let me know. Is this clear to you? Yes or no? Even you people are watching the video, you have any problem, do reply me accordingly. That is the point. So now the point is that how to calculate the NPV. How to calculate the NPV. The topic is how to calculate the NPV. The point is that. How to calculate the NPV, that is the point. NPV is actually about the evaluation of investment. Is this viable to the shareholder or not? Number one, the very important thing for NPV, this is long-term decision making. Long-term decision making. The word decision making you have already studied with previous studies or the previous subjects of this. Broadly, decision making can be used for short term, that is F5, performance measurement, management accounting. And number two, long term. So decision making is common at both sides. But here the decision making about long term. Long term decision making by NPV, where we will identify future cash flows. We will identify future cash flows. Number one, future cash flows. And then get the discount rate to identify the NPV. This is what about the topic. So if someone asks you how to calculate NPV, you must have to say that number one, identify the project cash flows, identify the project related cash flows, and identify discount rate. Sir, what is the meaning of discount rate? We will discuss later, but initially the point is very clear. Number one, cash flow. Number two, investors required return. Discount rate means investor required return. Investors required return. That is the key point. Discount rate simple means investor required return. So now what to do? We are here in detail about to calculate the NPV in detail. So we have to drill down the complications about future cash flows, and the complications about discount rate. But initially you must have to assume that this investor required return is available. That's available in the question. Means we assume that no complications. But after the topic of investment appraisal, where we discuss financing decision, this one, then we will cover how to calculate a discount rate, how to calculate the investor required return. So first thing is that only about the future cash flows, complications. Okay, how to calculate NPV? If the Toyota wants to launch new car, first of all, we have to identify the life of the project. With the life, what cash flows are required, how much investment outflow, how much returns in the form of inflows, then jot down all the cash flows. That is called the long-term relevant cash flows, net cash relevant cash flows, net relevant cash flows. And these relevant cash flows discount with a certain discount rate. And they can make final decision. How to make decision? Decision, very simple, you know very well. Decision rule. NPV positive, that means accept. NPV negative, that means reject. And do remember, NPV positive means accept, and NPV zero also means accept. We will discuss later that why zero we accept, but initially just positive, just negative. Positive accept, negative reject. Okay, now the very important thing, for the sake of NPV, the important point is about future cash flows. Future cash flows. Do remember that it's about decision making. It's about decision making, and decision making always based on relevant cash flows. Always based on relevant cash flows. Do you people know what is the meaning of relevant cash flows? Can you please reply me? In the decision making, what is the meaning of relevant cash flows? It's not the question only for the students who are taking live session, but also watching the video. You must reply accordingly. Very good. Relevant cash flows means two things. Number one, future incremental cash flows. Number one. That includes number one, future incremental cash flow, means the very important thing, past cost, which means sunk or committed, is irrelevant. Always irrelevant cash flows. Number two, always the future cash flows are relevant. Past or committed cost is not relevant. Number two, second thing, incremental. Incremental cash flows. Incremental cash flow means a portion cost, depreciation, amortization is always irrelevant cash flows. These are always irrelevant cash flows. Non-cash item, it's sorry, incremental. Incremental means a portion cost here, sorry. Always the cash flows, that's incremental is relevant. It's incremental, either variable or fixed, either fixed or variable, irrespectively. If the fixed cost exists and the project having the fixed cost which is directly attributable, variable cost which is directly attributable, that is relevant. Incremental cash flows, we can also say the directly attributable cost. Directly attributable means if this project not happened, the cash flows will not change or will not arise. Either fixed, either variable. Irrespectively fixed or variable. Associate with the project. Number three. All the matter about cash flows. It's about cash flows. Non-cash items are irrelevant, like depreciation, amortization, like impairment. Always irrelevant, but cash flow based are the relevant. Number one. So decision making always based on relevant cash flow. Number one, future incremental cash flows. Number two, opportunity cost. Any opportunity cost or benefit, that's also relevant. Any opportunity cost or opportunity benefit is also relevant. For example, if we are entering with a project, but for the sake of that project, we have to compromise our existing production line, one of the existing production line, and lost the contribution, lost the customer, lost the contribution because of space limitation. We don't have a spare capacity, space limitation. So for the sake of the project, we will actually lose some opportunity. That's called opportunity cost. Relevant. Sometimes opportunity benefit means if we enter in a market, maybe some more opportunities we will explore, but we will discuss this point later. Important note. One important note. Always remember that. Whenever you are calculating NPV, interest cost and dividends, interest cost for debt holder, and dividend for equity holder is irrelevant cash flows. The reason I will discuss later. But do remember, never forget. In the NPV question, interest and dividend, never ever the relevant cash flows. The main reason I will discuss later, but initially you must have to know that this dividend and interest already part of this discount rate. We will discuss this point later. Already part of the discount rate. So candidates, that is what a basic introduction about this, how to calculate the NPV matter. Now, what's next? We have calculated this basic structure of the NPV. Now, it's time to incorporate more complications like this. By the way, all these things, that's a part of my e-notes, all the descriptions. You don't need to pick any more thing till now. I will refer the book, but very limited. Okay, this one is the case. You have 3 minutes to attend this question. If I say attend the question, either you are taking live session, or either you are watching the video, pause the session, start working. Don't be over smart, be strict, be committed. Start. And always, whenever you are practicing the question, mark my word, develop one rule in your mind. You have to attend the question without any fear, that fear of something loose, fear of something wrong. If I'm going to attempt, if it's become wrong, just leave this. Just leave this and start attempting. Whatever the wrong thing, whatever the mistakes you have to do here during practice, why you are engaged with the fear-based working. If you are doing something wrong, that's your practice, and that will provide the result to your exam paper. Okay, now start. You have 2 minutes. Start now. 2 minutes. Okay, time is over. Now it's my turn. Okay, come on. LCH manufactures product X, which it sells $5 per unit. Sells $5 per unit. Variable cost production currently $3 per unit. Fixed cost 50 cents per unit. This is what about the basic information. New machine is available. New machine available, which would cost 90,000, but which could be used to make product X for a variable cost of only 2.5 per unit. Fixed cost, however, increased 7,500 per annum as a direct result of purchasing the machine. The machine would have life of 4 years. Resale value after the time of 10,000. Sales of product X estimated 75,000 units per annum. LCH expect to earn at least 12% per annum from its investment. Ignore taxation. The very important point. The first very important thing. Sir, what are the relevant cash flows? Ignore the calculation first. The very first thing is this. What is about the decision? Sir, what is about decision? The very important thing is to identify what is about decision. Is this any decision about? Is there any decision about sales? Answer me yes or no. No, it's not about the sales. The decision about to purchase machine to save the cost. Purchase machine to save the cost. Here, the decision is not about to purchase the machine to expand the production line, to expand the sales, to increase the sales revenue. No, purchase the machine to save the cost. So that is about what is about decision number one. Number two, yes. What are the relevant cash flows? Now the second important thing. Sorry. Apologies. Okay. Number one, what is about the decision? Number two, what are the relevant cash flows? Here the relevant cash flows. Number one, the relevant cash flows are machine. Yes, machine are the relevant cash flows. Number two, is the machine relevant? You must say yes. The machine is relevant cash flows. Number one. Number two, residual value. Yes, residual value is the relevant cash flows. Number three, savings of variable cost. Is this the relevant cash flows? Yes, is the relevant cash flows. Saving of the variable cost. Fixed cost. Yes, but which one? Incremental. Not the existing, but incremental. All the cash flows are directly attributable. All the cash flows are directly attributable. Directly attributable means if this project occurred, then the cash flow arise. Either machine, either residual value, saving of variable cost or fixed cost. Now it's time to put on with the values. LCH question NPV. But here we will work out with the NPV with the format to identify net cash flow first. With the format not horizontal but vertical. For example, 0, 1, 2, 3, 4. The project life is 4 years. Yes or no? Life, that is 4 years. Number one, we have to identify one by one. Number one, machine cost. Number one, machine cost. How much the machine cost? The new machine is available with a cost of 90,000. So minus 90,000. Okay, minus 90,000. Next. The residual value. The residual value. Resale value at that time, $10,000. At that time, $10,000. At what time? At this point of time, $10,000. Residual values. Now what's next? Savings of variable cost. Savings variable cost. So number one, the important thing here. What is that about? Right now, the variable cost, $3 per unit. Yes or no? But the revised variable cost, 2.5 per unit. So saving is equal to 3 minus 2.5. Now 3 revise 2.5. Savings per unit, that is 0.5. Okay. How much sales units per year? Sales units per year. Sales is not relevant in this case. Sales is not relevant in this case. But sales unit are important to identify the variable cost. So that means our savings amount is 37,500. That is the point. I hope that it's all clear to you. Number one. That is 37,500. Control C and Control V. Sorry. 37,500. Another point is about fixed cost. Another point is about fixed cost. So what's the incremental fixed cost? What's the incremental? Right now, the fixed cost 50 cents per unit. Do reply me. Is this relevant? Do reply me. Is this relevant? Is this relevant? Answer must be no. The variable cost must be 70,000, 75,000 per annum. Sorry. Fixed cost, however, increase 7,500 per annum as a direct result of purchasing number. 7,500, that is the value 7,500. Control C, Control V. So this is what about a basic question. This is what about a basic question. Basic question for what? Basic question about to develop the mindset. What is NPV? How to drive the NPV? Why we are discussing about the NPV? Why discussing about NPV? How to develop the approach? How to work out for the NPV? Basic approach. Now net cash flows. Net cash flows is equal to sum 90,000. Control C, Control V. This is what now the structure is very clear. The discount rate. The discount rate. LC expect to earn 12% per annum investment. 12%. Discount rate 12%. You can take from the discount table, that is this one is the discount table, that 12%. All these. 1 is equal to 1.12 power minus 1. Control C, Control V. And just change the power. Power 2, power 3, power 4. Now identify present values is equal to 90,000 multiplied by 1. Once again, put is equal to, take the cell 90,000, multiply, take another cell 1, 90,000. It's very simple. Control C and just project Control V. Present value. Now it's time for NPV is equal to sum 7476. That is NPV. Don't worry, the Excel file I will share definitely, the notes, all the things will be available to all the registered students. Don't worry. This is what about NPV, that is 7476. Do let me know, is there any problem till now? If you're watching the video, if you have any problem, do reply me. Till now, is that all clear to all of you? Do reply me. Thank you very much about this. Okay, another important point about the NPV. Another important point. What if, listen carefully. What if we want to work out directly the NPV? If we work out directly with this NPV, and we wanted to ignore these steps. We wanted to ignore these steps. Identify net cash flows and then calculate the NPV. We can directly calculate. How? Write the answer is equal to NPV, bracket open, discount rate 0.12, discount rate 0.12, comma, select inflows, here 1, 2, 3, 4, not the present value, cash flows, 30,000, 30,000, 30,000, 40,000. Then bracket close and plot plus sign and select investment, B7. You can directly pick the answer. This is NPV, 7475. Sir, can you please tell me once again? Yes, why not? Sure. What I have done, NPV, bracket open, 0.12, comma, is equal to NPV, bracket open, 0.12, comma, then select net cash flows. Only here 1, 2, 3, 4. Bracket close, plus, put the plus sign, got 90,000. Investment. You can get direct answer. Sir, it's very good. Is this, sir, is this working? Two questions. Is this working acceptable exam? Yes. Number one, acceptable. Number two, is this option available with the spreadsheet? Yes. Option available with the spreadsheet. Two issues. Function available? Yes, available. Acceptable? Yes, acceptable. You can just work out with this manner. Just ignore this and calculate with this manner. That's all. That's all. It's acceptable. This is shortcut. Don't worry, we will discuss a lot about the shortcut. Don't worry. Candidates, this is what all about this particular session. This is what all about this particular session. I hope that you people enjoyed that particular session. Got the knowledge accordingly. So it's thank you for my side. Take care a lot. Assalamu alaikum. If you have any queries, you can coordinate me on WhatsApp. Thank you very much.